Welcome to this episode of Revenue Generating Hour. My name is Matt Coots. I'm the CMO for RGA Network, and I am joined by
Veronica Hess.
Veronica Hess. All right, Veronica. So do me a favor for all of those who are listening and or watching, and tell me a little bit about what you do.
Sure. I am an independent insurance broker, and I broker benefits like health insurance, Medicare, group insurance, life insurance, and finance.
Awesome. Okay, there's a lot there that we can unpack.
Yeah.
So you are new to RGA. You just joined not that long ago. Let me ask you. Normally, I save this for the end, but why did you decide to join RGA?
So it's been a couple of years since I was able to be a part of a networking group, just due to lockdown and not being real sure about what was out there.
Mm-hmm.
I stumbled across a meeting about 3 weeks ago.
Mm-hmm.
For a week, I dipped into meetings here and there, and then I found this meeting here.
Dipped in, I love it.
And I loved it.
There you go.
So I've only been a member for 2 weeks.
Yeah, that's kind of my story. Well, I'm just pulling her up on the podcast right away. Good timing. This is the second week because obviously we had the hurricane last week.
That's right.
Which we thought was going to be a direct hit to Tampa. Thankfully, it didn't. We're sorry to our friends and people that we know that are down south. Obviously, if anybody is having issues with that, please contact us. We want to make all of the RGA resources available that we can to you. But yeah, so that really means you take that week into consideration. Realistically, it's been a week, 2 weeks. That's about it. So last week we didn't do the podcast. It's something that we're doing quite a bit now. We're trying to really get it out there and help people and promote their businesses and all of that. So you did a wide range of things. What would you say that right now you do the most of?
Well, funny enough, because of the time of year, I would say Medicare and group insurance really take precedence this time of year.
For sure.
Just because we're in an open enrollment period. So from October 15th all the way to December 7th is open enrollment for anybody who's on Medicare. So I get a lot of contact this time of year for that in particular. Fall is also a really popular time for group open enrollment. Those can be throughout the year, but it just ends up lining up.
Right.
Fall is a very popular time for open enrollment.
Right. No, for sure. And then obviously you get other enrollment periods and stuff or special enrollment periods at the beginning of the year. So I always say those 6 months, it can be crazy. If you're going to more than one meeting during that, the real thing is how many, so a lot of our members will go to more than one meeting a week because we're not seat exclusive. We want everybody to create relationships and connections and all of that. So I know one of our members goes to 4 or 5 meetings a week, and I'm yeah, but during open enrollment you don't.
Oh, absolutely not. No, there's no way. Actually, that must be considered some level of a superpower to be able to split yourself in so many different directions. Because I think the first week that I joined, I think I did go to 4 meetings.
Okay.
And then that was obviously a bit slower last week because of the storm.
Right.
But I'm already seeing with our schedule starting to pick up, I'm where can I balance in at least 2, maybe 3?
Yeah.
And maybe scheduling in areas around those meetings, but...
Well, this is the perfect opportunity for me to talk to you about the preferred model for what we encourage everybody to do.
Okay.
Yeah, so we'll just do a little RGA session right here. You can learn all about what new members go through when they go to an RGA meeting.
Perfect.
So what we want to do is we want you to pick a home meeting that you go to.
Okay.
And then we want you to do speaking tours and go visit people and become a known commodity. But keep in mind we want you to have that home location that you help grow. That's where you're building deeper relationships with and connections with, and then that's where you're bringing guests as well. So. So by all means, go do speaking tours, come to Founders Meeting, which is where I help run, and with Mark and Rick, and that's where you should
just
visit.
heard about the Founders Meeting last week.
Yeah. Funny thing about Founders, last week, literally, we had to bring chairs in because we ran out of space.
Oh, I bet.
It was the first time in a year because obviously during the pandemic, RGA had shrunk from 40-something chapters down to just around 20.
Right.
And now we're in the process of rolling so many new things out. For instance, revitalizing this podcast. We're doing another podcast called Ignition Cycle. So we've got all of these different tools and resources that we're starting to roll out to help people promote their business, to give them additional resources, exposure, all of that. As well as, have you seen anything about RGA Speaks yet?
Yes.
Okay, fantastic.
Yeah. Funny enough, the first meeting that I went to just visit before I signed up was the Tuesday right before the first Friday of RGA Speak. So they
Oh, wow.
were talking
Okay.
about it getting up and running.
So, were you on the live stream for
No.
RGA Speaks? No. Have you been able to watch any of the videos or participate in any of the business builders yet?
I did a business builder,
Okay.
but that's all I've been able to do so far.
Okay. Yeah. So just so everybody knows, actually this Wednesday we're doing the live stream from here.
Okay.
Because we had to reschedule. Last Thursday was when it was supposed to happen.
That makes sense.
So we had to pull back from that. So we're not doing it. So St. Leo University is one of our education partners.
Okay.
And we actually do the live stream there, but we're not, just because we had to move things around this time around. So, so we're doing it once a month. And then December we're taking off and reevaluating and just
Okay.
kind of, because this was like our 3-month trial of,
Right.
how's this program going to look? What's it's going to do? How impactful can we make it? All of that stuff. And honestly, I think everything I've heard has been pretty positive so far.
Yeah.
I mean, what was your experience?
So I really enjoyed the business builder, and from what I heard, even before things were gearing off and I was just a visitor, they were really excited.
Yeah.
That was like one of the main focuses of the first part of our meeting,
Yeah.
was explaining this new program that was rolling out, and they were like encouraging us to sign in and join as soon as possible so we could participate.
Yeah.
It was really good.
Yeah, no, so that's awesome. That's a wrap. We don't need to talk anymore. This was perfect. Thank you for this RGA commercial. Just kidding. Okay, so Medicare, life, under 65 group, all of that stuff I'm fairly familiar with. Let's not go from what I know.
Okay.
Let's go from what like a prospect should know. Obviously, going into AAP, they've probably seen commercials. If not, they're about to see commercials.
Oh,
They're about
yeah.
to hear commercials. Everybody just gets bombarded, right?
Yep.
So tell me a little bit about like what your process for Medicare is, like how you work with people. Tell me a little bit, and then we'll go into like some different products. But just because
Sure.
that's like literally here, right? Let's talk about Medicare
Yeah,
for a little bit.
Medicare's 2 weeks away, and it's got a special place in my heart because I started in Medicare. I started 9 years ago, working almost exclusively Medicare before I really branched out into life insurance, finance, and group.
Right.
Really for a Medicare prospect.
And I don't know why, too. Like, everybody starts there assuming Medicare is going to be, like, the easy thing. It's like,
And it's-
you obviously haven't been in the insurance industry very long, but go
No.
ahead.
And I was, 22, had just been recruited into
Yep.
an insurance company. They're like,
Yep.
this is your life now. And it was a great place to start. I met some amazing clients that I still have today, two of which came to my wedding.
Oh, wow.
So, you build
Okay.
really, really great relationships. In terms of what they should know, they already are being bombarded.
Right.
Because advertisements start in September. We can start marketing in October.
Right.
What I would remind everybody, especially for Medicare, would be that quotes are always free. Your formularies change annually. So having...
And if
at
you're on
least-
an MA plan, oftentimes your network's going to change annually, too.
Yes,
So-
because your doctors can change their affiliations.
Always want to make
That's
sure.
actually every 90 days.
Right. Now, they have to let you know about that. The carrier you're with has to let you know that they're going to be changing their providers. Your doctor might not be on it, but it's never a bad idea to like run through, especially if you know that you're going to be doing some other doctor's visits in the next
Yes.
year,
Yes.
just to make sure everybody is when you're selecting your plan.
And at least for the first quarter of the year, all of those participants are now actively listed on all
Right.
provider sites as of Saturday. So as of October 1st, that's all properly listed.
Awesome. So your process is kind of evaluating the doctors and prescriptions to make sure that.
It's a good place to start.
Yeah.
I like to start there because Medicare is almost the exact opposite of one shoe fits all.
Right.
It can be different plans are suited for the same spouse in one household.
Totally.
So I like to start off with getting a list of their physicians that they absolutely are married to.
Okay.
Someone that they're just not willing to swap. And then a list of their prescriptions, because oftentimes their prescriptions not only determine a large portion of their annual cost, but also it can show me whether they would qualify for a special, it's called an SNP plan, so a special needs plan.
Right.
And a lot of people don't realize that those are out there, or they don't realize what they qualify for when they enroll into a plan like that, which can also drastically decrease their prescription costs, their co-pays. It can increase some of their benefits that they're getting, like their over-the-counter benefits.
Right.
Some of those plans even have Part B buy-downs, so it reduces the amount they're paying out of their Part B premiums from their social.
Yep.
So there's a lot of benefits to starting simply just at what doctors do you love and what prescriptions are you taking.
Right. I know one of the things that I see I get questioned on is like the different types of plans that are out there. I know in the supplement world that's a whole can of worms, and we don't have to
Right.
go into that. But just like the type of provider plans available on the Medicare Advantage side, you've got your PPOs, your HMOs, things like that. What's your take on like? Obviously, it depends on the situation, depends on the client. What is all that? Break that down into like a Reader's Digest version.
Sure. So you are right that supplements are a whole can of
There's
worms on their own.
there's a whole bunch of plans.
Just strictly in terms of speaking Medicare Advantage, if you were to compare an HMO and a PPO, oftentimes the only difference that a lot of people know or think of offhand is I need a referral or I don't need a referral.
Right.
And that's a big one. Having a good relationship with a primary care is surprisingly not something that everybody has. So if you don't have that relationship to where you can approach your primary care provider and say, I need referrals to these specialists that I see regularly, an HMO may not be the option they want to switch to.
Right.
Because they have to establish with a primary care doctor, and that is their first step in care. Outside of that, one thing that I've realized that people don't know, a similarity between the two, is that you have emergency care nationwide. A lot of people think that they have to pick up a PPO if they travel. Like
Right.
if, say, you have some kids in Colorado, Georgia, North Carolina, and you spend a week here or there, well, what if I have an emergency? Well, whether you're going to the ER, whether you're going to a walk-in clinic, HMOs and PPOs are billed as in-network for emergencies.
Right.
You can't pick a physician that you like to see outside your network, especially on an HMO.
Right.
But if it's an emergency, anybody has care nationwide.
Yeah, that's a good one. Okay, let's talk about with the Medicare Advantage plan. It's kind of like the thing that nobody ever wants to talk about, right? It's the maximum out of pocket.
Okay.
So, like, explain because most MA plans have them.
Yes.
So, what is a MOOP? And also, since we talked about prescription drugs earlier, how like those don't share. Those maximum out of pockets don't share, right?
Correct.
And I think that oftentimes people get confused by that if it's not clearly articulated. So explain what the MOOP is from the healthcare side, and then talk about the prescription drug side, like what those out of pocket, what that MOOP looks like.
Okay. So MOOPs are fun. I like them, and they vary widely. So you might have a maximum out of pocket on an HMO that can cap you at $1,400 to $1,800 annually. So all of the costs that you're paying, whether it be your copays on your plan.
Depending on where in the country you are, I've seen them really high before.
Well, that's just on an
Yeah.
HMO.
Oh, yeah.
We actually have some 2023 options on PPOs that I know are in the $8,900 range.
Yeah.
So, that's a $10,000 range. You could be at $1,400, $1,800 on a nice HMO.
And that's an annual.
Annual.
That could be an annual maximum out of pocket right
Yep.
there.
And that's often an interesting point for someone who has had a SUP for years, but we're seeing some increases just due to some changes that we're seeing on the Medicare system in general.
Right.
Say, for example, you have somebody paying $200 to $260 a month, but then also comparing it to an Advantage plan that caps out at about $2,000.
Right.
You know that no matter what, now you're not spending anything up front, but you have a bad health year and you
Right.
hit that MOOP, you're not even coming close to even touching the premium you're paying out of pocket on the front end on a SUP. So while they're both very valuable in and of itself, those maximum out of pockets can really determine what your next best step is, depending on what's affordable.
Right.
MOOPs.
Which is why it's so important to talk to somebody who actually knows what they're talking about, and not just like a call center.
Right.
Somebody who has like a vested interest in making sure that you are going to like actually be like given the care you need.
Absolutely. Because some people, they have a lot of security in buying a supplement because they know that Medicare is their primary. It
Right.
gives them a bit more of an open playing field. But eventually, as those rates increase, because they do have to,
Right.
and they become unaffordable, they still want that sense of security that they initially purchased. But it needs to be affordable now.
Right, totally.
And sometimes that step, that progression between those two types of plans can be scary. But
Yeah.
those max out of pockets really play a big role in that.
Yeah.
And it comes down to liquid assets, what you can afford if you really did have a year where you hit that max out of pocket.
Oh, yeah.
One thing that I do see confusion with is some people will almost look at a MOOP as a deductible. They're like,
Right.
oh, so if something happens, I'll hit this number.
Right.
Well, no.
That's not necessarily true, no.
No, because there's so much structure to Medicare Advantage plans. You have, and typically you don't have a medical deductible. At least in Florida, a lot of our Advantage plans don't have a medical deductible. So you're looking at adding up your copays, which can start at $5 and usually cap out around $65, depending on what level you're looking at.
Right.
And those just slowly add up to that max out of pocket.
Right.
And like you said earlier, your prescriptions are not going to go towards your medical max out of pocket. There's a whole separate
Right.
maximum when it comes to prescriptions that leads you into the donut hole and then catastrophic coverage, which I've realized the
Which is
donut
so
hole is a
fun.
scary term
It's
for
a
everybody
scary
now.
term, yeah.
But some of the plans are actually covering fully donut hole prescriptions for different tier levels.
Well, especially like the S&P plans and things like
Yes.
that. They have a little bit, they have more coverage on
They
there.
do. Yeah, that's why
and
it's
Medicaid
really,
plans.
Yep.
Yeah.
So dual eligible, so
Yep.
Medicare, Medicaid, dually eligible plans, whether you're partial or full, those typically have coverage through your donut hole. If not, you have much better resources if you were to
Right.
hit it. But in terms of just your standardized HMOs and PPOs, there are some new 2023 options that I believe it's tier 1 and tier 2 or tier 1 and tier 4, depending on the provider you choose, has full coverage through the donut hole.
Awesome. Mm-hmm. That's cool.
So they're definitely improving that touch of scariness that comes with, will I hit the donut hole this year?
And let's get scary. You know what the scary thing is?
Hmm.
That medically necessary Part B drugs.
Oh,
So like
yeah.
chemotherapy, for example, is like intravenous drugs
Mm-hmm.
are not covered under the prescription drug plan. It's covered under the health insurance
Correct.
plan.
Yes.
So depending on what your maximum out of pocket on your MA is, could be what your maximum out of pocket, because I believe that's a 20% cost share.
It is.
That's not
it's
even.
a 20% cost
yeah.
share.
Yeah.
Yep. And that does, you're right, it's billed in your medical
Talk to
portion.
somebody who knows what they're talking about. I'm just telling you.
No, it's so true. It's a scary thing. A lot of people have that fear of what happens if I have a
Why did I get this
diagnosis.
bill, Matt?
No, it's true.
Yeah.
And it's hard to understand if you're looking at something that truly, it can look like another language if you
Right.
really don't know what you're looking at.
Right, totally.
So,
Yeah. Very cool. So that's good. So we just went through like a bunch of Medicare stuff. Let's talk about some of like the group like health. Like
Sure.
So how long have you been doing group health?
I picked up my first group about 4 years ago.
Okay. Okay. And over those 4 years, how has the market kind of changed, or has it stayed pretty much the same? I mean, I feel like probably like about 2 years after Obamacare came out, like things kind of like solidified a little bit more on the group market. But
Yeah.
there was a period of time where group health agents did not know if they were going to be in the group health market because nobody knew what was going on the next day.
Right.
So I think since then it's really stabilized. So probably in the last 4 years it's been pretty stable.
There's been
but-
quite a bit of stability.
yeah, but what's happened from a coverage carrier agent standpoint that would be important to like a prospect or consumer or something like that, or company
Okay.
who's like, maybe I don't know what I know. you know?
Sure.
Or don't know what I don't know. Let me get my phrases at least right.
No, that's fair. And I think one thing that I've come across in the last 4 years, even though the plans themselves with providers have been stable, there is a difference between a fully insured plan and a self-funded, level-funded option. And I don't think that's something that most brokers will explore with an employer.
Okay.
Because typically they have both options.
Right.
Obviously, your fully insured plan will provide you some extra benefits that a level funded may not, unless it's brokered during your contract signing. And one nice thing about a self-funded or level-funded is it gives you a little bit more freedom to create and build a plan with your broker that might suit you. It's very nice.
Like the benefits of it, you mean?
Yep.
Okay.
A lot of benefits are structurally, they're adaptable, so we can adapt a fully insured plan as well. But there is a little bit more that's open to negotiation on a level funded. In terms of what that level funding is, it helps to mold your premium a bit closer to where you want to be. And if you have a group that is low in claims, or at least fairly stable in claims, you're actually open or eligible for a reimbursement check at the end of your plan year.
Okay. Nice.
Yeah, so for small groups, that can be huge.
So let me ask you, because I've seen a lot of this written over the years,
Sure.
and it seems like it's something that agents have been slowly incorporating, especially like as Medicare Advantage plans have become more and more prevalent over the years. do you see a lot of hospital indemnity plans, like filling gaps in things, whether it's on the group side or it's on the individual side with the MA?
Yes.
Yeah.
So both are
So
actually.
explain what a HIP is.
Sure. Okay, so a hospital indemnity plan, similarly to the way you just described it, it really helps by filling in some of the gaps that are left behind by your initial coverage, whether that be an individual coverage, Medicare coverage, or group. It's a premium plan, so you'll pay a set premium for it, but what it does is it pays or reimburses you a set amount towards your inpatient, outpatient, and emergency care.
Right.
So you're eligible for an amount if you were to just go to the emergency room and be sent home, if you were to be admitted to the hospital, or if you go in for an outpatient. Typically, that's where it ends.
I have seen some that have like
Ambulatory?
well, I was going to say coverage for like cancer, like an initial cancer
critical illness
diagnosis.
plans.
That helps if, like if they go on chemotherapy and they're on a Medicare Advantage plan, they may get some of that cancer treatment taken care of, at least for the first year, while they're figuring out life.
Yes.
So those are always nice.
So there are policies, they're called critical illness. They cover heart attack, stroke, and actually they do vary quite a bit. So something like that, and they're typically low premium.
Yeah.
Adding something like that to your hospital indemnity, or even as its own, as a standalone to your medical plan, can also be a huge safety net for someone
Right.
who might either be worried about cardiovascular history, like family history, cancer
Right.
in their family history. And it does, I mean, for someone like myself, who's in their 20s, 30s, or maybe even 40s, I mean, budgeting anything between $8 to $40, and knowing that if I was to be diagnosed with, say, for example, a cancer, that I could receive a check in the mail for $10,000 to $100,000 to cover my deductible, and then
Right.
knowing that the rest of that check is something that I can use towards treatment, travel.
Well, and the
paying
big
expenses.
thing is it could be, I mean, so I'm one of those people where I'd want to like try everything possible until I was just not able to.
So anything that's not covered by your medical insurance because
So
it's
if you wanted,
experimental.
something that maybe the healthcare primary wouldn't take care of.
Yeah, it gives you the option to cash pay for something
yeah,
like that.
yeah. So that, or if you want to like go to the mountains for
Yeah.
something, I mean, whatever.
It can also be great to pay or help cover the bills for a family member who will take time off work to take care of you.
Right.
Because not often do people have somebody who can be
Right.
there to take care of them when they need it.
I see that really big in when it comes to like long-term care, extended care planning. People forgetting that there's a certain level of care that needs to be provided, and usually that falls on the caregiver, being like the spouse or somebody who lives near
Right.
them. So that's that's time and energy that
Yeah.
if they had been working full time, it's a lot harder for them. That kind of leads into what the next thing we were going to talk about, or I wanted to bring up, which was kind of like the critical illness kind of led into like accelerated benefits, and that made me think about life insurance. So,
Right.
what type of what type of life insurance plans do you normally offer, or do you share? Obviously that depends on somebody's needs and their situation, but
Of course.
kind of what's your strategy there?
So there's a wide range. Typically, you will see life insurance ranging from a set whole life for final expense to term, and then also universal indexed. So in that, there's a very wide variety of who should be investing in what type of insurance and what is best suited, what type of policy is best suited. Oftentimes for whole life, you're seeing a set coverage timeline as long as you're paying your premiums up to age 121. So you know that policy, as long as it's paid, will not expire. And the benefit that you qualify for will not decrease. So it is a safe and level way to know that your final expenses are covered. So
Right.
it's something small and simple typically. You'll see those under 80,000.
Okay.
And then you have your traditional terms, and those are
Right.
anywhere from your small term to you can go all the way up to 30 years term. Some of them are renewable, but it depends on how old you are when you're initially buying those.
And of course your renewable. So once many of those plans turn renewable, they turn into ARTs.
Yep.
So ART is a annual renewable term, and that means that every year your premium goes up too. Just FYI. So actually, I know some people in my family that have those, and they're like not going to be in a good place, but because
Right.
they've had some medical conditions and now they can't qualify for anything else.
One thing that's interesting for that is if you end up on an ART and you end up kind of seeing what that path will look like. Some companies, if you want to convert your term into something similar to a whole life.
Yeah.
They have a level and graded whole life.
Yeah.
So
Yeah.
a graded whole life policy is something that could be qualified for, which
Just don't expect to get the same.
you will not get the same benefit.
The
probably
same
within the
face
first
value
3
for the same
years.
premium.
Yeah, it's a slow crawl. So if you apply for
The
a
person
graded
in
benefit,
question that I was talking about has like a $500,000 policy.
no.
Yeah, and they are not going to get what they're expecting.
no.
So yeah, it is what it is. But that's why it's super important to have an agent that knows what they're talking about, has a good knowledge base, works with a lot of customers, and has seen a lot of things, so they can help formulate the strategy, whether it's healthcare, life insurance, financial planning, all of that. So thank you very much for joining us.
Thanks for having me.
It was fun.
This was really fun.
We just had some insurance, some nerdy talk, so we hope that was beneficial for you guys. And in case you didn't notice, if you're watching this as opposed to listening to it, we are live at Area 52 Media Group, and we are in one of their awesome sets. I think they have like 7 sets right now. It's kind of
Really?
crazy. Yeah, we're actually shooting RGA Speaks here in the near future, just because we had to postpone it from the hurricane. So we're gonna be live streaming it from on location at Area 52 Media Group. So thank you very much. I did want to. I already asked you why you RGA. I even asked you about what you thought about the business builders and the RGA Speaks. Did you hear about the RGA Women's Council?
No.
Oh my God, the first one's tomorrow night.
Oh,
There you go.
okay then.
There you go. We'll
need more information
I'll
on
get you
that.
all the information. It was in the weekly email.
Okay.
If you're not getting the weekly emails for RGA, please let us know. Go to rjanetwork.net for all things RGA. And we hope we hope to see you soon at a meeting near you very soon. There we go. Fantastic.
Thanks.
Have a good one, guys.